Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. And if you want to join the UVH fam, links are in the description below to our Discord and our options trading group on Facebook. If you're here right now, say what up. Jeff, Keith, how you doing? What's going on? Mateus, what up? Happy Tuesday. Yeah, Tuesday. We got Tuesday. Markets overall pretty flat. I mean, SPY closed up on the day by 7 cents. I mean, literally 7 cents on the day on SPY. Like, so terrible. Looks like we're dropping a little bit after hours here. FedEx just had earnings. Right now they're rocking at 152 bucks. Dropped from 63. So it was actually, they were pricing in, FedEx options were pricing in a $10.18 move, and it's right now it's moved about 11 bucks or so. Oh, Wednesday for you. Where do you live? Ray Lee, welcome back. It's been a while since I've seen you. If you're here right now, say what up. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Today I got paid and learned a lesson. so it was a 2-for-1. I would much prefer to get paid, but you know, it's one of those. Oh, Sydney, Australia, nice. For some reason, Australians like to visit Miami. I don't know what it is. You'd think you'd want to escape the heat, but when I go to Miami, there's Australians everywhere. A lot of them. All right, so let's get into it. Peter learned a lesson. Get into it. Day trades, I'm green. I'm overall kind of flat on the day because I had to take off my Boeing position. Let's expose the truth here. Let me hope everybody puts at the top. Ray Lee, where's the top? Where's the top? They've been saying top since 2011. Anyways, if it's Wednesday where you are, you should have told what the markets would do. Yo, Billy. I agree with that, Keith. Gotta give us some insight. Got paid in Boeing and spot today. I haven't traded spot in a long time. Mainly because they're like illiquid options, but if they got some liquidity, yeah, they got. Oh, it's open interest. Volume. It's not bad. I mean, the puts are really bad. Calls are okay. 459 on the 155 calls. Not loving it. But 10 cents bid in the ask is not terrible. Not the best. Looks like FedEx is stopping. Good plays today. All right, so let me get to my trades here, and we'll go through it. So Boeing, it says I'm only up 35, but I'll go through that. I actually made $100 on the day trade, and I made $135 on the day trade, and I closed my put spread down, and I lost 100. So realized 35 bucks. But let's get through it. Had a lot more trades today than I thought I was gonna have here. So let me do that. So today started off pretty strong. I had a 20% winner on Facebook this morning, right out the gate. I did, as you can see here, I stayed disciplined. I did wait till the first 15-minute candle to close. Opened that up at 8:46 a.m. So 15 minutes into market open, 16 minutes into market open, I should say. Opened it up for $1.44, sold it for $1.69, and I bought the 197.50 call. And what I've been kind of doing in this type of market, so in this type of market, you have to be more precise about your entries and your exit. So I have been playing around with RSI, and Facebook had a pretty big sell off this morning. Came down from 198 to 196. Jeez. I don't know. To 196, and then a rebound. What I was looking at here, I mean, the market was green. I was looking for some buy the dip plays, and this met my criteria. And as you can see here, the RSI triggered to oversold, and when it was bouncing back, when it came back up above 30, so it was like RSI was like 31, I put the position on and ran it up to. I closed it out at 857, so I closed it out right on this candle right here. I had the 197.50 calls, so I did sell them quite a bit early. But basically, what I was looking for was some confidence boosters and really overall just some quick day trades. And this came down from 320 all the way down to $1.40. $1.40, and actually hit $1.36. We played the bounce back. I actually opened it up. I got a really good price, $1.44. Your charts look so weird with the indicator. Yeah. So then I played on the move up here. I closed it at 169. So we closed it early. This candle did run up to 194, but like I said, I was only looking for a 20 to 30% winner. I took it off at 20% because I didn't want to have any mistakes, and as you can see, it did grind up. It did hit 250, so we could have made another $100 on it. But Facebook was kind of acting weird because it started to pull back some. It started to pull back down to 196, and on a green day like this, it was hard to understand what it was going to do if this came back up and came back down to like 196. So I figured that after Facebook's run yesterday, I didn't want to take any chances of this breaking right here, like the one breaking down below 196, because then it potentially go to like 195. David, my volume is muted. I'm in a meeting at work, but I'm here. Meetings are a waste of time, man. I mean, well, I guess you can't hear me. It's kind of a weird situation. But yeah, so Facebook was a nice quick day trade, and then we had two lessons back to back, Netflix and Home Depot. I opened up trades, and really the lesson for today, or probably the lesson for this month, is buy the dip, don't short. That's really what it was looking like. So I was coming up on Netflix, so I bought the 312.50 put for 335, and I bought it at, what did I buy that at? 906. So I waited for it to get up to here. It was about 314. It started to pull back a little bit, so I put my position on. And let's look at that 312.50. Let's look at that 312.50 put that I had. I did sell it. Let me. So the 312.50 put. Let's go into. Okay, and let me show you these trades here on Netflix. So essentially, I bought it for $335. I sold it for $289. So we lost $46 on that, and we actually could have lost. Daniel, what's going on? We actually could have lost a lot more because I put that on when it was right. It was right in here, and it came down all the way down to 236, and I closed it out at 10. I closed it out at 10.28. So on this run back up 289, I guess we could have squeezed for a little bit more. But on this run back up, I closed it out at 10.28. So right in here, I closed it out for 289. So I actually didn't get the full discount. I got the bounce back right in here. I got the bounce back when I was just touching 3 again. Then it came back down to 250. But I mean, it's overall pretty high risk because Netflix. I mean, I guess if I wanted to short it, I wanted to be more patient, but there really wasn't a whole lot of juice to squeeze for the shorts, because I mean they pinned this thing between 316 and 315 all day. I mean they were just eating away premium at this point, and this is a good example why possibly, even if you get wrong, if you're shorting premium, it could go in your favor, because they, like times like this, they just bleed you out. And implied volatility spiked up a little bit, but it came down. It was up a little bit higher. So, I should have been more patient if I wanted to short it to to the 315, 316 area. But really, when it hit 316 and it came down to 313, so this would have been, if you were going to short it, this would have been the play right here. From 315 down to 313.50. That was the play. Instead, I entered in, and this is why it's important if you're going to do something. I mean, I'm not saying you can't short this, but the way the setup was, it provided no room for mistakes. So I put a position on at 9:06. So I put my position on right here. It was like 314. It then moved up to 315.80, and then came back down. So I entered in right here, and by the time it got back to here, it ate the premium. So even though it was the same price in the stock, it ate away the premium, because it came back down to the same price and it wasn't moving. And then it ate the rest of the price up after that. So I think there's definitely more momentum to buy. Obviously, right now, shorting, I think, is a bit tough for really anything, and I think that's just how it's going to be all month. If there's like no news, I mean, we're going to be just sitting it. Hey guys, if you want to do me a favor, hit the like button. I appreciate it. Helps my stream out. Home Depot, same thing. I bought 2 contracts though for $1.08. Sold them back for 74 cents. I was shorting again. I bought the 217.50 put, and I'm not saying this was a bad idea, but wrong execution. Way easier to buy the dip, except there was really no dip this morning on Home Depot. Let me pull up the 217.50 puts. Actually, they're going for more money now, a little bit more money now, because it closed at 217. I could have held. I just didn't want to take the chance. Now, how we could have played this a little bit different. These did come down to 54 cents. I sold them for 74 cents, so I did cut losses. Jim Brown, did you go through with that FedEx iron cutter? I did not. I actually did a paper trade on my Thinkorswim paper trade account, which we can check out. I'll show you what the after I get through my trades, I'll show you what my FedEx trade was going to be. And I could show you if it was gonna. I'll see if it makes money or not. I don't know. I had 2 ideas essentially. Oh, David can hear now. I said meetings are a waste of time. People sitting around talking about doing something and they never actually do it. Anyways, I'm not bitter. But Home Depot. So Home Depot, as you can see here, was showing oversold on the RSI, and I was playing that a little bit. Didn't really work out here because it stayed above. Now it did come below, so this trade, if you did get in, if you wanted to do it, you'd have to wait. This is where it kind of got a little tricky. If you're playing RSI, is where it got a little tricky here, because what I've been looking at is Matthew, a little bit of confirmation on the RSI. So if it goes up into overbought, this coming back down would trigger me to start putting a position on. But then it came back up, stayed in oversold, and is same with Netflix. Netflix remained oversold pretty much all day. And then this would have triggered another. So this one wouldn't have worked out. This is where I shorted right in here. So right in here, this didn't work out. But if you shorted right here, this worked out. So that's why you really need to use RSI with other technicals, I mean with other support and resistance, not just day trade, because it did come back up to here to 2020, got knocked down. I thought right here 2017, 2018 might be resistance, and it wasn't. So, you know, do you have a video on what you do before choosing company to trade? What to look for, where you get your stock news, that kind of stuff. I lost more money today. Yo Luis, how you doing? Sorry, late again. I'll go back to rewatch Set on Hands today. I just started, Matthew. I just started going through my trades here. So Home Depot. Lesson is it's way easier to buy the dip than it is to short in this market. So Home Depot didn't work out, but Boeing. So Boeing, I had a nice day trade here. Bought the 325 call at 345 for 345. Sold it for 480. So it was a 40% winner within like 8 minutes or something like that. Yeah, I opened it at 9:36 a.m. Closed it at 9:44. Now Boeing. Let's look at this call here for a second. Boeing's been a tricky one, and for some reason, even with bad news, I mean, Boeing wants to go up, so they're going for like 470 right now. I sold it at 480, but this thing flew. So let me show you here. So I got in 345. The low of the day was 243. Let me show you with Boeing. So Boeing, I've been interested going long mainly because I called the Home Depot last night. Didn't get into this. Didn't get it right this AM. Yeah. Now Boeing, what I've been saying, despite the bad news, you got to look at the technicals. Okay. So if you look back to a couple times, back in August, bounced pretty hard from 320 back up to 370. Right. Then back in October, came down to 323, bounced hard. Back up to 370. So, this could have been the third time that it touched this. I mean, it is the third time it touched it, but it could have flushed, right? This could have flushed down to 300 and kind of squeeze out longs. But you gotta understand that Boeing is 70% institutional owned. I mean, they're not going to go down without a fight. I mean, there's millions, hundreds of millions, if not billions, at stake here. With Boeing. So they messed up bad, but what I was looking at is even though the bad news, they weren't coming down. I mean, pre-market, they dropped to 320. Then they came back up into the 322 area, and it was holding, for the first hour, it was holding. Sure, we swung a little bit from 326 back down to 320, but it was essentially holding. I had no idea it was going to spike up like this. So at 9:36, I put my position on, so I actually put it on this candle when it started to break out to 324, and then it flew up to 327. I took the position off immediately. I didn't wait for the next candle. As you can see here, I got out at 480, which was basically at the top of this candle here. But this went all the way up to 780. This could have definitely been 100%. Could have definitely been 100% or more gain, but I'm thankful for the 40% because the times that this week or last week that I didn't take my 50% wins, I didn't take my 40% wins, I was greedy and I regretted it every time. So I took it, and this time it runs, right. So it's the time that you take the gains, it runs further versus the times that you hold on thinking you're going to squeeze more out and it drops, right. That's just the way it goes. So I guess in the long run, if you take 40% every single time, 30% every single time, you never have a problem. Yes, you'll feel bad, but more times than not, this is gonna spike up and drop. This is not very. I mean, I'm not saying it's not typical for Boeing being oversold like this. But as you can see, it did give some back after Boeing hit up into the 330s. We did come back down to 325. I've been long last week when it came down last Friday. Shouldn't have put this position on, but last Friday I opened a credit put spread I'm thinking gap fill now on Boeing. Yeah. So I was short. I'll show you here. So I was short the December 27th 342.50 put, and I was long the 340 put. I was thinking about rolling this. I could have rolled it for a credit into January. So I could have rolled into the January expiration with a $5 width, and I could roll it down. I could have rolled it down to like the 335, 330 like this, and I would have gotten about $1 more credit for it. However, I was gonna lose $1, and I just didn't think it was going. So because I had that good day trade, I took it off for a $100 loss instead of rolling it. I took it off for a $100 loss. So I had a $1.15 credit, and I actually bought it back for $2.15 debit. But with the day trade, I was able to get out of Boeing unscathed. Hank, how you doing? Yeah, we can go over that. Unscathed on that. So bad news is my profits went to recover the losses from that put spread. Good news is we were able to recover the losses from that news event and not have to roll. Let me cover Roku. So I am long Roku right now. I have the 138 call for this week, bought it for 226, and I was looking at Roku, and it was flat all day. They've had bad news this week. They bounced back hard yesterday. It was flat today. So usually when the markets are like this, kind of low volume, dead on flat days or on down days, you just start kind of adding a little bit. I probably should have done next week's expiration, but I think that this is going to move on up. If Netflix can move on up tomorrow, I think Roku and Disney will also follow. And it was pretty much, it's been holding, bouncing between 333 here, right here, 333, 335. So last couple times it's been down here at 333, 335. It has bounced. I just gotta make sure if it does bounce up to like 148 and 140. I don't know why it's not even 3. I'm saying 138 and 140. If it does bounce up to 138, 140, I have to make sure to lock in the profits, not get greedy, take the money, move on, redeploy. That's the motto. You got to redeploy. Take your profits and redeploy your capital. That's the motto. But that pretty much sums up the trades. Now FedEx. Let me show you some examples of what I was looking at FedEx. Now FedEx is currently at 152, so probably better I didn't do the position. I chose not to trade it. Now there were two. Let me show you that. Let me show you what I was looking at here on FedEx. So I actually still have. Okay, so I was looking at next week's expiration, and I was looking at selling the 148, buying the 145, and then selling the 177 and buying. That wasn't it. That was not it. I think this is the play that I was going to end up with here. So let me show you on the curve here. Let me turn off analysis so you can see. So I was looking at a range of between like 150, 175. It was at 163 when the market closed. We're looking for a 10% move. What I didn't really like is that these are not up to date, I don't think. Let me see here. I guess they are. The IVX here for the weeklies was only 82. Next week's was 53, and I just really wasn't loving it. The other trade that I was looking at on here was something like this. I was looking at something at the money, similar to what I did with Chewy, but you have to make sure if you're doing a trade like this, it doesn't move at all. So I actually paper traded this on my paper trade account, but did the. Let me see if I can pull it up here for you. Let's see. Let's see. Pull it up on my iPad. So I'm not gonna. Okay, so let me see what this trade was gonna be. Hank, I got you. Hold on. Okay, it's not pulling up. So, not sure it's not pulling up, but I'll show you the trade here. So it is I bought the 148 put, and I bought the 177.50 call, and it was something like this. But if you're gonna do something like this, it's pretty risky. You want to make sure it doesn't move at all. But what I was looking at, if we go to the analysis tab here, now this is a bit aggressive for a earnings play, but you have to make sure. It did work out pretty well for Chewy. This play, I did a very similar play. It was obviously lower risk because it was less capital than this, but basically max profit's 910. The max loss is 590, and what I was looking at here, we'll go into. So this was tomorrow, and I was anticipating this was going to be down by, let's say, 25% in terms of implied volatility. So we'll make the adjustment, bring it down 25%. And, really your profit zone right here, it's got to be below 171 and above 154. And if it stays above 154, theoretically going to make about $60 on this. If it's flat, I mean, you're going to be making theoretically tomorrow $336. If it was like 158, you're going to make 252. So right now, FedEx is at 152. So this trade, if it opens here tomorrow and the IV drops 25%, theoretically we're going to be down. We would have been down $60 on this trade. Now we do have the next week expiration. If it does bounce back, you'll be making some money. So you have that. But like I said, this is a risky trade. If you're going to do something like this, and you might want to sell like the monthlies. Go out to like January. So you might want to do the Januaries right here and go out to 30 days, and then, but like I said, at 39%, there's not going to be a whole lot to squeeze out of this. It wasn't like Lululemon, where it was 150%, 180%, But I know some of you guys traded FedEx, but I mean, I liked it. I liked the setup. I just didn't like the option pricing. So the setup on the 1 year chart, I was shorting at 175, which is resistance, and then I was shorting the puts at 148, 150, which is support. So I mean, I liked that about the trade. I just didn't like the option pricing. Okay, Hank. IRBT. I mean, all the Chinese stocks are moving right now. IRBT. So this really needs to get above 52 to do anything. I mean, it's getting to the point where it's at resistance here. If you're looking short term here, for me, I wouldn't go long here until it could break. Like, I would probably go long if this was me, right here, like 52.50, 53. I would go long right up in here. Try to fill this gap up to 54, 55. Here, you have a high probability of it getting rejected at 50, 51, and it's already 49. So, you missed the dip here. People get FOMO, so you got to be careful. You got a 2 week on a 49 call. I mean, if you're up on the position, like for me, if I'm up on a position like this, let's say I bought in like 40. Let's say I bought the 49 call and I got in at 47, 46, and I wrote it up. I would get out because you're coming up to resistance here. So, when trading options, you want to put the probabilities in your favor, and this is a high probability of getting rejected. So when it has a high probability of getting rejected, you want to reduce the risk, take your profits, see if it does get rejected. If it doesn't get rejected and it continues, you could buy another call. Because if it doesn't get rejected, then you can shoot for this gap fill here. So I mean, that's what I would do. You can always put another position on, or if it does get rejected and it comes back down to 45, you get to reload and do it again. So I don't see why you wouldn't take that off. Baba, same thing. Baba. So these Chinese stocks are running. I mean, Alibaba, I think needs some pullback down to 200 right now, but it's. I honestly, I mean, I'm bullish Alibaba and what they do. I mean, their all-time high is 211. So I'm kind of waiting to see what happens up in here. At 208, it's not that exciting to me. I'm not going to try to short it because in my mind, Alibaba has been grossly undervalued due to the trade war and it's been holding it back. So I'm going to see what happens. It's 208. I'm going to see what happens. I can be patient, see what happens here at 211. But the trade war has, I mean, if there was no trade war, I honestly believe Alibaba would be a $300 stock right now, based on their revenue and valuations and all that. But because they, the trade war, we threatened to delist, Chinese stocks from the exchanges. I mean, there was a lot of bad things happening, so people started pulling money because there was when there's uncertainty, people aren't going to put your money in there. Like if you run a pension fund, you're not going to be like, hey, make sure you have my holdings in Alibaba or have it, So hedge funds, pension funds, those things that people hold a lot of money in, they're not going to put it into Alibaba. They'll put it into Amazon before Alibaba. They would rather have no growth for the year and tell their clients that, hey, we didn't go up to 5% this year or whatever, than, hey, we blew up your pension because we put it into Alibaba and now it's zero. Because it got delisted and we lost all your money. Sorry. Hope you have a good retirement in 2 years, So I don't think Alibaba's out of the woods yet, because one thing is there was no trade deal that was signed. Supposedly we're signing it in January. We have a agreement on paper or whatever they want to call it. So there's an agreement. No one signed it yet. I don't understand what the big deal is. Why can't they just go sign it? Second of all, then they got to work on phase 2. This thing's going to go on for 80 years. I mean, we're going to be dead before we get a resolution to this thing. I'm going to see on Alibaba. I'm going to see what happens up at 211 because now we're going to be at a multi-year resistance. If it blasts through, I mean, sky's ahead. But you can see now you can see how undervalued it was because ever since the trade deal was announced or resolution that was coming, it went from 180 to 208 in about 3 weeks. Same with BIDU. However, I don't think BIDU in terms of growth is as strong as Alibaba. I mean, I do think they're undervalued. I mean, I think they'll probably come back up to like the 180, 200 area, and now they're only 120, but they got beat to death. I mean, this could definitely, if there is an agreement, I mean, this thing could definitely come back. I want to say at least 180. Just come back to the middle. As high as 284, as low as 93. So between that is about 180, 190. So I could definitely see, BIDU coming back in there. So I've played BIDU in the past. This for going long looks a lot more looks a lot more interesting to me than Alibaba, because now we have this big gap fill right in here if we go to the 1 year. So I'm gonna see if we can get above this 123 area. I will definitely play this gap fill. Actually, I'm going to set an alert right now. I've been looking at it, but I'm actually going to set an alert. So we're going to do gap fill, baby. Okay, so I set up my alert there. Actually, we're going to replace it, and we're going to do 124.50 because it did touch 124. So let's do 124.50. Okay. So we'll see. I'll start monitoring one more if we can get. So it's good. I actually spent a lot of time researching last night, looking for trades and just getting comfortable with the low volatility market. So the thing is, like, once you get comfortable with the market will then change. We'll be in a high volatility market, right? Eric, I got a small Netflix put. Let's see if I got some bucks tomorrow morning. Shorting Netflix worked out terribly for me today. Terribly. I only lost $40, but it could have been terrible. Could have been bad. Who else got some stocks? Who else? Starting to add BIDU already. Let's see here. Long Amazon. Oh man, FedEx is 152. But I was thinking that this is mostly. So it's going to be down to 152. So I think FedEx is going to be interesting right in here. The 151 area in the last 3 times has bounced pretty nicely at 150, 152. So we'll see what happens. I mean, even last earnings, there was some downtrend. I definitely think there's going to be a day trade on FedEx tomorrow, either direction. We'll see if it can break the 150. If it breaks 150 tomorrow, would be ideal for a short position, but we'll see. Amazon. So Amazon, I was looking at it. There's a couple plays here I want to show you guys. Google was down 5. Amazon was up 21. Now Amazon has been consolidating pretty much for the last 4 months or so, and it's been bouncing right around like 1730 area in the last month. And we should have caught this bounce right in here. I guess one of the things that you have to be careful about, and one of the things that you have to find balance, is to get a good position. Now Amazon's not going to go out of business; they're not going to get cut in half. But the question is, are they going to go back up? They're consolidating. They're peeing between 1,700 and 1,800, which is nice, which makes it predictable. But as it's downtrending here, you think that it might bounce here at 1735, but it could also go down to 1700. So you have to really just have confirmation of the uptrend. So probably the confirmation, it would be here. If it hits 1725, 1730, start looking, and then once it breaks 1750, start adding in long. But it's dangerous. One stock today that I was looking at for a day trade went quick. Chipotle. That's a little bit higher price stock, but I've been looking at Chipotle. If you're looking at their chart here, they have been pinging off the 800 area. But today, it dipped down to 816 and ripped up to 832. So it had a really nice clean buy the dip right here. This is definitely what I was looking for, and I didn't trade it, but but this is a very nice dipped, nice clean on the way up. I probably would have exited. I definitely would have exited probably like 825, 826 area. I probably would have exited on this candle. Bought the dip 820, came up to 824, I probably would have cashed out 825 and then it continued at 831, but I'm scared to go long CMG. I mean, I think their numbers support their chart now. But what gets scary is, like, you know, they had earnings and they had this downtrend. I was looking to get long, but it just kept going down. And then it caught this right here at like 725 and then reversed. So right now, for me, it's a buy the dip play unless there's a catalyst to drive them lower, you know. All right, guys. Any other stocks? What was the other stock I was looking at? Oh, there it is. Let me. So, Restoration Hardware. I've been looking at it now. I was actually really looking at buying this dip here at 220, and then of course it reversed up to 223. But the reason why I've been hesitant about that is the volume on these is just not good. I mean, in the bid and the ask, I mean, on these calls, you're looking at a 40 cent, 35 cent. I mean, it's just not good. So I'm probably not going to trade it unless it's earnings. You know, Restoration Hardware, I like the chart, look great. It's been resting at 220 and it's looking like it's going to make a reversal back up to 230. But you got to be careful because of the volume. I mean, there is volume. Open interest is okay. Volume on these is just not that good. In the bid and the ask is 40 cents apart, 30 cents apart. So, you know, if anything, I guess you going into next week. Let's see what next week is. So I'm looking to make a play on it to like the 230 area, but I'm not sure about the options. Volume doesn't seem that good. What's with the therapeutic stocks this year? They're getting a lot of FDA. They're getting a lot of FDA approvals. So, you know, but overall, I mean, overall it was a good day. Good thing is we had control over our positions. We had control over our portfolio. We set stops. We got out for both profit and loss. So I felt like I had really good control. You know, so I'm going to continue trading like that this week and just stay disciplined. So you guys have a good rest of your day. As always, stay safe, stay green. It's us versus herd.